Welcome back to another video from Crypto Fire, where we talk about Dogecoin, cryptocurrency, and investing. In this video, I'll talk about how and when we'll see the next big crash for Dogecoin and the crypto market. Statistically, the Memorial Day holiday is followed by low liquidity and non-existent volume on the market. As the market becomes more leveraged, we might see a condition in which the market faces a spike in volatility because of the lack of liquidity. Back in 2020 and 2021, cryptocurrency market volume dropped by 43% and 35%, respectively, suggesting that this year's market activity will also stay at an extremely low level, considering the number of institutional investors that have entered the digital assets industry. Also, Fundstrat's Sean Farrell said that investors buy put options on the long positions they have in their portfolios and cut exposure to speculative altcoins. His view on the market is tied to the abnormally low liquidity and the potential spike of it during the Memorial Day holiday. It is also important to note that the market is not deleveraging, and open interest on derivatives is currently growing. The macroeconomic conditions are also not in favor of risky assets like cryptocurrencies during rate hike cycles. Farrell expects things to get weird during the upcoming holidays as the market faces low liquidity, increasing leverage and tightening monetary conditions, which is the perfect recipe for a hefty price swing. So there you have it. We need to be prepared for the Memorial Day holiday because data suggests that another crash is coming. Now, let's talk about the broader market for a minute. The Dow Jones Industrial Average, S&P 500, and the Nasdaq all rallied yesterday. The S&P 500 rose about 2%, reaching around 4,050 by the closing bell, while Nasdaq spiked 2.7%, hitting 11.74K. Quincy Crosby, a Popular Financial's chief equity strategist, believes the rebound may be a sign that some of last week's doom and gloom predictions were overhyped. He said that, although this was unexpected and highly talked about potential oversold rally, the underpinning for today's market climb higher suggests that last week's doom and gloom about the all-important U.S. consumer may have been overdone, along with the dire recession headlines. Now, at the same time, the crypto market failed to gain any momentum. While stock markets have improved and crypto assets have not, a number of traders have been discussing crypto decoupling from stocks in terms of correlation. The economist and trader Alex Kruger spoke about crypto decoupling from stocks. He said, "Worst-case scenario for crypto is here, that is apathy and decoupling. The correlation with equities is now broken. It's been largely gone since Monday afternoon. Now equities bounce alone." And then the Bitcoin proponent Luke Martin, host of the Stacks podcast, also talked about digital currencies not bouncing back with equities markets. And after this, Ripple CEO Brad Garlinghouse talked about what he thinks needs to happen to attract more entrepreneurs and investors to the crypto industry. He said that regulatory clarity and certainty are necessary to attract more participants into the crypto space. He also said, "The industry lacks clarity and lacks certainty. The overwhelming majority of people working in the crypto industry, I think, are good actors that want to do right by regulators. But when the rules of the road aren't clear, it's very difficult to manage within that. And so for entrepreneurs and investors to participate in these markets, to invest in companies in this space, you want that clarity and certainty." Another similar comment was made by senior analyst at Deutsche Bank Research, Marion Laber. She shared her outlook on cryptos and pricing behavior in the context of demand exceeding supply as regulation looms in the background. She basically said that more regulation is required in the market after what happened with Terra. On this matter, she stressed that there is a disparity between Bitcoin and other cryptos, especially the newer ones in the market. She said, "I think we definitely need regulation. As you mentioned, financial literacy is pretty low even in advanced economies. We need more data as well. There is clearly a lack of data regarding cryptocurrencies. I think what happened recently is probably like a good reminder that not all cryptocurrencies are the same. Some are very new, also very risky, and they are very different, so we shouldn't compare Bitcoin, which is the oldest and the biggest in terms of market cap, with more recent cryptocurrency." Now all of this is good because crypto regulation is coming very soon, and it seems that the regulation will be in accordance with people's demands. So the Financial Conduct Authority, which is known for being critical of digital assets, took a different tack in its first crypto sprint. In this event, they said, The last 2 days have been hugely positive, with participants collaborating closely on what future policy might look like. It was striking that the general view on future regulation for the crypto market matches ours, with consumer protection and market integrity key to providing confidence in this evolving sector. So basically, they're getting clearer on what crypto regulation will look like, and it seems that it's not going to be all that bad for cryptos. Now coming back to predictions and analysis, MasterCard's VP product for digital assets said that crypto has to become invisible in order to reach mainstream audiences. Boss argued that integration, rather than upheaval, was the only realistic path for crypto to achieve mainstream adoption. He also said, "I keep saying that and I sound like a broken record, but it has to disappear in the background for a user who doesn't care. Honestly, my mom doesn't care if it's centralized finance or DeFi." The MasterCard executive predicted that crypto would experience the most growth in areas where businesses are able to embed DeFi into their existing framework. Boss also detailed a number of barriers to crypto adoption, including a lack of knowledge about the industry at a senior management level, the cost and speed of blockchain, and regulatory concerns. The VP was adamant that crypto would need to garner more consumer confidence in order to achieve mass adoption. He also said, "No one will use digital assets on blockchains unless they are absolutely certain that this money is good money." And then Marian Laber, an analyst at Deutsche Bank Research, said that she believes the value of Bitcoin will continue going up depending on what people think it is worth. Laber said it is relevant to consider the value of diamonds when talking about Bitcoin. She pointed out that the price of diamonds has soared over the past 50 to 70 years, and the value increased due to communication around the gem. She noted that the Tinkerbell effect, which describes things that are thought to exist only because people believe in them, plays a significant role in determining the value of Bitcoin and other cryptos. To this end, Laber believes it is difficult to specify the exact value of the flagship cryptocurrency. However, she believes 4 factors are responsible for pushing Bitcoin's price up and down over the years. The first aspect is psychology. Like in the case of diamonds, Laber believes the price of Bitcoin and other cryptos will rise depending on what people think it is worth. The second factor is demand and supply. With Bitcoin having a fixed cap of 21 million coins, she believes it will continue soaring as demand increases. At the moment, more than 90% of Bitcoin's supply is in circulation, meaning demand will increase exponentially. Another aspect is regulation, which Laber believes is coming soon. She pointed out that clear guidelines in the nascent asset class might help onboard more users. Regulators and lawmakers have previously called for the swift regulation of the crypto space, especially after Terra USD and Terra imploded. Finally, she spoke about volatility, noting that the crypto market has been volatile for many years and is unlikely to change soon. However, Laber believes friendly regulations will help increase the crypto space's liquidity, thus reducing volatility. Now, all this is applicable to Dogecoin as well, since its 30-day price correlation with Bitcoin currently stands at 0.97. Coming back to Bitcoin, Michael van de Poppe said a breakout is coming relatively soon for Bitcoin. He also said, "Breakout is coming relatively soon for Bitcoin, and if we combine that with FA, then we can clearly assume that are going to be the trigger. If inflation slows down or jobless claims are fine, the Fed might be slowing down the policy." He also evaluated the altcoin markets as a whole, which he sees dropping quickly. He said, "Overall weakness in the markets as altcoins are dropping down heavily. That will probably continue in the coming period, unless the overall sentiment switches. In that case, focusing on USD pairs until Bitcoin dominance tops out around 50 to 52%. Now coming back to some more good news for the crypto market, crypto exchange Binance will assist the government of Kazakhstan to put up the efforts for regulating the crypto space in the country. Binance, the world's leading crypto exchange by trading volume, has signed its Memorandum of Understanding with Kazakhstan's Ministry of Digital Development, Innovation and Aerospace Industry. Basically, we'll see a lot more money come in from Kazakh, and we'll also see a lot of crypto innovation happen there. Now coming back to Dogecoin, some great news from today was that Bitcoin, it is now accepted as payments by Scott Dunn. Scott Dunn is a major company for luxury travel, and so I'm really excited about how it'll impact Dogecoin's price in the coming weeks. If we look at Dogecoin's price, it currently stands at 8.2 cents. But what's really exciting here is that transactions exceeding 100K have now risen compared to last week. While the signals are mostly bearish or neutral, the percentage of holders in profit is still above 50. And that's really good compared to other cryptos like Shiba Inu. In any case, do you think Memorial Day will bring another crash? Let me know in the comments section below.